Hello and welcome to this edition of Closing Trades right here on ET Now with me, Aisha Faridi, Shrishti Sharma as well with me, and absolutely flat. That's how we're going into tomorrow's trading holiday. But, today has been even narrower than yesterday. Other than those first few minutes of an adjustment, it's been a very, very narrow slimmer of a band that the Nifty at least has traded in from the high to the lows of the day. For the large part, we've just done nothing and just dragged our feet. Although there is a tug of war which is sort of playing out for the equity markets. Look at a Bajaj Finance, that's really on one end. It's a 5% crack along with FinServ, which is down over 5% right now. Trent, which is lower by nearly 5%. Tata Motors, SBI ahead of its numbers over the weekend, 3% lower for that stock. But on the flip side, there's a Maruti, is Bharti, HDFC Bank, Jio Financials and Reliance, which are still managing to hold out in the green. For the broader end of the market, though, it's been a lot more decisive. There too, you have extremely steep reactions, both on the upside as well as the downside. But it is the declines which are taking over. And the key pressure points there too are the likes of an Exide, BSE, which is also down about 3%, and so on and so forth. Of course, there are also the Realty Pack, which is also holding out very smartly. What with the move on a Godrej Properties, on a Lodha, Prestige Estates, these are all stocks which are holding out very, very smartly in trade. But let's figure out where is it that we go from here. Kunal Bothra joins in on the studio right now. Kunal, hi, afternoon. Another day of consolidation. What are we gearing up for on Friday?
Yeah, not a quiet consolidation for the markets, but today the market breadth is a lot more deteriorating.
Yeah.
It's almost 1:3, 1:4, 3.5 approximately for the market breadth in favor of declines. So that's, I think, causing that slight bit of edginess on the market front, because you're seeing many of the stocks either not being able to break past about their previous highs, or many of the stocks are actually going to going into signs of reversal on the short-term charts. With the lack of volume support. So I believe that that's a sign that maybe the markets could just about consolidate for a few more sessions. We would still be looking at 23,800 as a strong support. That also notes down the 200-day moving average for the Nifty, as well as the previous swing support from where we bounced off in the previous Friday. And on the upside, 24,500 is still a resistance. So in that band of 700 points, we would expect the index to consolidate, but the market breadth deteriorating. I think if it happens for a couple of days more, that could indicate that maybe more weakness could be in store for the indices going forward.
All right, so that's the day coming in on the benchmark indices, but a lot of result candidates, and especially from the auto pack, we have the numbers coming in from Exide as well as Greaves Cotton 2 did come out with its numbers. But specifically for Exides, when we see, then the numbers, there was a marginal miss when it comes to their operational performance. The margins, what the street was penciling in, was close to 13%, close to 11% is what the company has clocked, though the management commentary remains on the positive side. But this has been the case with Exide, where they are optimistic about the outlook going ahead, but the delivery onto the number front is not that up to the mark. But Kunal, specifically on the charts, what are the charts indicating? Because the stock is just getting deeper cuts tick by tick.
Yeah, I think fourth consecutive quarter of the stock showing downtrend. I think from 600, the stock is almost at 350 levels, and the pain still doesn't seem to be going out for Exide. And when you look at the historical charts, there have been periods where the stock has gone through 5 to 6 quarters of consistent price correction before it finds any major support. So I think with the fact that the stock is unable to lift off any kind of major uptrend, the lack of buying, the results, the news flow surrounding the stock price, continue to disappoint. So I think in that aspect, we would probably expect the stock to drag further lower.
That's that on Exide. You're seeing the numbers come in from Equitas Small Finance Bank. In fact, we should try and, collate the numbers that have come in from some of these small banks and how stark they have been. Look at a Jana, for instance, that's cracked about almost 10% today. Or for that matter, even some of the large caps and weak numbers coming in from the Bajaj Group companies. Bajaj Finance, they've reduced the long-term ROA and ROE guidance. They've cut the long-term growth guidance. So that's clearly not auguring well for the stock, which continues to languish about 5% lower as we speak right now as well. Kunal, what do you see on Bajaj Finance? Do you think there could be some more pain down the line?
Yeah, Isha, I think what's happening actually is that the pattern for the markets are changing. Bajaj Finance was one of the strongest name in the entire rally, which started off on that Jan-Feb lows for the stock and then March lows for markets. But then in the last 1 week or so, the stock has ebbed off I think if I'm not wrong, 1,000 points from 96, 9,500 to 85, 8,600 where it's trading right now. And that's a very sharp cut for a stock like Bajaj Finance. Now, today, of course, the reaction of the stock is based on what transpired on the results or, the expectations post results. But then I think, ideally we wait out for maybe 1 or 2 days max. If the stock gets into a follow through downside, say over the next couple of days, breaks below that 8,500 mark on closing basis for the next consecutive 2 days, then I believe that could be an indication that traders are not just expecting the stock to correct post results, but they're also expecting that the stock would drag and correct further. So I think 8,500 could be a critical support to watch out for over the next couple of days. If the stock falls below those levels, then I believe that there could be more 300 to 500 points selling also further, which could be possible.
Well, much of it would also be dependent on the way the rest of the market also moves. Yeah, but 8,500, let's see whether that gets tested or breached, like Kunal is saying, and whether that happens in the next few days owing to the earnings disappointment. But what's the disappointment? What is the street now saying? Is there going to be a derating after the numbers that we have seen? Varun is here with that analysis.
Definitely. So it looks like that the dividend and the stock split and bonus are not going to work for the stock today, because the overall results, if you look, it's a miss on what we were expecting. If you look at the NII, we were expecting it to come at around 9,866 crores. It has come at around 9,807 crores. Also, the profit we were expecting 4,574 crores. It has come at around 4,480 crores. So there is a slight miss. Also, the pre-provisioning operating profit, there is a growth of around 24.3%, but it is less than what we were expecting. No doubt, the gross NPAs, they have shown a good decline from 1.12% to 0.96%. But if you look at the commentary of the company says for FY25, the company has missed its net interest margin, credit cost and profitability guidance. In fact, for FY25, the NIMs have shown a compression of around 49 bips, and the company says for Q4, the NIM is actually lower than the overall FY25 NIM. For FY26, the company expects the profit to show a good growth. The AUM, that is expected to grow by around 24 to 25%. Now for FY25, the AUM growth was 26%. So the guidance that the company is given is lower than FY25. The cost of funds, they are expected to decline by around 10 to 15 basis points, and the NIMs are expected to be stable. Now for the long-term guidance, the company has reduced its ROA and ROE guidance. The ROA guidance now stands at around 4.3 to 4.7% and ROE 19 to 21%. The company says that the new business is doing good. The overall B2C business, that is shaping up good. But yes, there are some challenges in unsecured, personal loan segment, especially in the urban areas. So if you look at the overall results, it's a slight miss. The commentary of the management, yes, it's okay, but the overall growth guidance that the company has given has actually disappointed, especially for FY26, and the long-term guidance, the company has cut that.
Well, the big newsmaker has also been Indices Bank along with Bajaj Finance. And here's Tamal Bandyopadhyay, senior journalist, sharing his views on Indices Bank's accounting discrepancies, the fact that the MD and CEO Sumant Katpalia as well stepped down just yesterday with immediate effect. Tamal, of course, emphasizes that this incident has raised concerns and questions on the bank's corporate governance issues.
It's not a huge dent to the bank. That bank will collapse, and neither for the depositors. I can't talk on behalf of the investors, but certainly as at this kind of thing, it's not a, the bank will go down under. That is not the question at all. In fact, Reserve Bank of India governor called it an episode. So I would agree with that. This is an episode, very unfortunate episode. It's not a systemic risk, neither is a risk for the bank. People's money are safe. Investors, they have their own calculation how to come back to this, or buying the stocks again. That's a separate, or staying put. That's a separate story. It will not have a huge dent on the bank balance sheet or profitability in future, provided the other businesses are fine. But it raises a very critical question about corporate governance.
As far as the bank is concerned, it's a very stable bank. A bank with a very good balance sheet. So, we recognize, of course, that 1,960 crores or 1,970 crores, as the case may be, may have to be now provided for, and they've already, there is a mention that they'll provide it all in this quarter itself, which means the annual accounts will look very different. But I suppose as far as the bank is concerned, soon, they will really find the leadership, and they'll reconstitute the leadership group as the bank is stable. The bank is very much stable.
The next 2 quarters will be washout quarters because if the 2,000 crore discrepancies impact has to be taken in this quarter. Apart from that, 600 crore MFI book discrepancies have to be taken. So forget about quarter four profitability, and even if the interim CEO is appointed, there will be some of the other legacy cleanup or other things. So I'm not currently betting on the from the thinking from the earnings perspective, but from a change in guard perspective, and rather than because it is very difficult. It is a very challenging time because it is very difficult to pencil in any earning estimates at this point of time. So rather than investors should think to play through this event because till the time external CEO or private banker is appointed, the stock would have already been priced in.
Welcome back to Closing Trades right here on ET Now, and taking a look at the markets. Well, once again, the Nifty 50 has come into that green territory, a bit of a spike coming in the last 5 minutes or so, while Nifty Bank is also seen to be recovering from the day's lowest point. And select counters, especially the life insurance counters, are doing very well. HDFC Life, SBI Life holding on to their positions, being in the top gainers list for Nifty 50. But with this, let's also welcome on board Sanjay Parekh, who is joining us on the show right now. Hi, Sanjay. Good to be speaking with you. Sanjay, a lot of sectors that are in focus on the back of the news flow. And firstly, let me start with the OMC pack. As we have the numbers coming in from BPCL just yesterday, and now just a while back we have the numbers for IOC, and the numbers look damn great. Help us understand that how do you see the numbers as well as the sector view for OMC?
Yeah, so in ONC, we don't have an exposure right now while we track it very closely. So, one issue is the uncertainty in terms of the profitability. So, as you know that while refining margins are linked to global prices, marketing margins on a gross basis are based on the market prices, but the LPG under recoveries is still uncertain in terms of how much would be borne by the companies, how much would be borne by the government. It's still very fluid, so predictability of earnings now gets difficult. And then you saw excise duty increase by the government. As of now, they are making very good spreads because the crude has eased off, and you do tend to make very high marketing margins if the price has not reduced. And we've not seen price reduction on a retail level. As I said, a bit of excise duty increase was there, which goes to the government, but yet the spreads are still very high. But what we need to see is net of LPG under recovery, whether that is a sustainable spread. So our problem is the uncertainty and not predictability in terms of the marketing margins. And hence, while the valuations are great, the results have been good, but that is our discomfort.
Right. Sanjay, I have to know, just wondering what's the market call right now? We've done well for ourselves in the last 1 month since the tariff announcement on April 2nd. The FI money as well seems to be coming back. But does it seem like it's tactical and short-term in nature, or do you think the FI buying is here to stay?
I think what is coming out is globally, we perceive to be better off, much better off in this whole chaotic scenario in the world of the tariff issues, and our relationship is optically looking quite stronger with US, and hence maybe the expectation is that we would have a mild impact in terms of the tariffs for India. Having said that, I think it's still a very chaotic world. There can be second order effect as well. While China, US, the whole issue will take time to resolve. It could have a lot of ramifications in terms of import vulnerability, our export threat. In a sense, if we are exporting somewhere in the world, would China not try to dump there? Because the capacities are huge and they are overcapacity in a lot of sectors. So I think it's a very fluid scenario. We need to be a little cautious, and on domestic side, earnings also are not going to be great. We have a weak earning season. We've seen some of it which are good, but now we're going to see what is going to come out also. You'll see some disappointments. So the expectation is earnings will be more like flattish or minor growth. The key point now is recovery. Will we have recovery in this environment purely on domestic growth and within this global chaos? I think that is one thing that we need to watch. And there, I think, we do carry some risk and we need to be a little careful. Structurally, we are very, very positive because all the balance sheets are in good shape, but near-term valuations are, I would say, more like fair value. So I think there could be a time correction and price correction. Both is possible of 3 to 4% price correction, maybe 3 to 5% price correction, some time correction, and some clarity on this global scenario because it's important for us as well.
What's been your own strategy right now? What is it that you've done in the past month? Bought anything afresh? Completely avoided something?
Yeah, so our portfolio is more domestic heavy. We need overall financials, we are overweight. We are banks, larger banks we own and we like them and it's worked well for us. Discretionary space, we have autos, both Maruti and Mahindra. And then on capital goods, we are positive, we have overweight there as well. And then we have utilities, mild overweight on pharma. IT are underweight because we think the growth is going to be slow. So there we are underweight. And oil and gas, we have some representation to Reliance, but overall we are underweight. So, and then metals, we are overweight with Vedanta. So that's where telecom, of course, we are overweight. We are big overweight in telecom, both through Bharti and Indus Towers. So overall, our portfolio is tilted towards domestic and less global, and it's worked well for us by now.
All right, but Sanjay, within financials, we have two of the news makers. First one is Bajaj Finance and the other one is Indices Bank. With respect to Bajaj Finance, though the guidance is not looking that exciting and there's a bit of a profit booking on the stock, but we can't complain much given the fact that the stock is already up 25% on the YTD basis. And on the Indices Bank, who will be heading the bank next? That's the key question. Give us some sense that how do you see both of these financial measures and what's the outlook here?
Yeah, I think Bajaj Finance structurally is very, very good. Long term, if you take ROEs, growth, they've done phenomenally. And as you rightly said, it's run up quite well in the last 3 months and it catched up on the underperformance which it had in the past. And hence, some profit booking. And to be fair, their credit cost is higher than expected due to the changes in the ECL model that they said, but certainly the street would not like where as early as third quarter they had said that they want to be in the range of 2%, but it ended at more like 2.3% plus. So I think that was a little bit of disappointment, but otherwise it's an absolutely top class management, and at a price it looked reasonable. It's run up, so valuations are rich. And, I just set a price once, an entry price, which could be a little lower, and it will look very attractive to invest again from a longer term point of view. The Indices Bank, I think it's it's a fifth largest bank going through a temporary pain. And you will see change, all the right things are happening in terms of you'll see leadership changes. I suppose RBI is also very proactive and are handholding the senior management. You've seen some notice being put by the management and confirming by RBI. So I think they'll work through it, navigate it. We don't think there's a structural problem. There was certainly a pain in terms of the way they accounted the derivative book. or if there is any minor slippage in the microfinance book. But the size of the profit, uh, if you look ahead, is still going to be very, very good. It's a lakh crore deposit franchise. They've done a lot of good things over the last 20 years. And once the leadership situation gets better, which in the right leadership team comes through, uh, we are quite hopeful that things will fall in place.
Right. Okay. That's the take coming in on how financials should be treated right now. But Sanjay, what's the take that you're, analyzing PSBs with? You've got SBI's numbers over the weekend. Some of the smaller banks have actually given a positive surprise. The MFI segment clearly continues to see pressure. Where do you think PSBs are headed next?
So PSU banks, you suppose? Yeah, okay. So, what I heard is people asking me on PSU banks, right?
Yes,
Or
that's
PSU
right.
banks, that's
I'm
right?
asking you about private sector banks, or rather public sector banks.
Okay, yeah, perfect. No, so we own SBI and we are quite positive. Only thing in the near term, and there could, because the repo rate cuts have happened, so the asset side repricing happens faster. So as we have seen, and it could happen that there could be some pressure on NIMs and NII. That could be even not only for the coming quarter, but more so for the first quarter ahead. So this would be a year of low growth, is what we think. But however said, the franchise is very, very strong. They have an ROEs in excess of 16%, ROAs around 1%. They manage the credit cost very, very well. And we believe that, this phase of repo rate cuts led pressure on NII is a temporary phase. While, longer term, we are quite positive, and it's stable at less than 1 time on FY27 price to book X of subsidiaries. So that's where we're positive. Other than PSU banks, we'll prefer the largest name, and you would have their representation. And we don't own the rest at the lower levels.
All right, Sanjay, with this, we let you go on that note. Thank you so much for taking the time out and speaking with us and giving us a sense that what exactly are you looking at in the markets at this point in time. But with this, viewers, let's move on, and let's also welcome Shrikant Chauhan on the show right now. Hi, Shrikant. Great to be speaking with you. Very good afternoon, first of all. And Shrikant, firstly, help us with your view on the financials, because for today they are seen to be taking a bit of a back seat. Well, of course, we know that heavyweights are declining in today's trading session. Within the Nifty Bank, it's SBI that is putting the most of the pressure. But where do you see Nifty Bank headed in the last half an hour for this particular week? What kind of an action are you envisaging?
Good afternoon, everyone. See, like if we consider the overall breadth of the market, then in the last 3 weeks, if we see the overall trend of the market, then we saw specific buying interest in almost all the banks. And Bank Nifty has crossed its previous high. But now I am of the view that at these levels where the stocks are very close to their resistance level, and in fact, most of them have crossed their previous highs. So at these levels, we need to be more and more selective, and that's the reason we could see some more consolidation on the Bank Nifty. And based on its overall technical formation, I am of the view that till the Bank Nifty is not crossing 56,100, we need to be a little bit careful in terms of taking any call on the index. But yes, in case if there is any correction, then close to 54,500, certainly we should look for taking some contra bets of going long Bank Nifty. But otherwise, I'm of the view that financials in that specifically at these levels, we like ICICI Bank as well as HDFC Bank, and even State Bank is also very close to its important support levels. So close to this 790, 785, the stock is having excellent support. And based on its formation, I think 775 is the maximum that downside we can see in the near term. But in next maybe 3-4 days, as the company is also going to announce its number, I'm of the view that the stock is heading for at least 835 again.
All right, 8:35 could be the next stop for SBI. Well, of course, the numbers are due for SBI, so let's watch out for that. But for today, yes, indeed, there has been no significant recovery from the day's lowest point. Other than that, let's also put the spotlight on some of these automakers, auto majors rather. And Maruti Suzuki is now actually the top gainer when it comes to the Nifty 50 numbers. And well, of course, we are waiting by to see the numbers for the month of April when it comes to the auto sales data. And this time for Maruti Suzuki as well as for the whole lot of the passenger vehicle segment, we are not expecting much. Why so? Because for the passenger vehicle segment, the companies have actually pushed the sales forward, but that was on the back of some of the discounts that the companies have given, and onto the wholesale data, you will not see much of an impact. Other than that, what we are seeing in the two-wheeler segment, the excitement is not that much when it comes to the two-wheeler counters. But well, of course, companies like TVS Motors, they have been highlighting that for the month of May and June, they are looking forward to a good sales data on the back of festive as well as marriage season sales related. Other than that, the tractor is the segment to be, is what the dealers' reports are highlighting, because positive consumer sentiment and favorable base persist. And for CVs, the volumes expected to be muted this time around. So definitely, if one segment has to be looked out for, it could be tractors, because the sentiment on ground is holding up positively. So let's watch out for that. But Kunal, just wanted to quickly have your take on Maruti Suzuki, though the numbers are awaited, but specifically on the charts, what are you looking at? Because a couple of factors there. The numbers were not that disappointing. The news flow related to Maruti Suzuki, given hybrids across, etc., they are holding up well. And on the charts, a 3.5% jump.
Yeah, it's a good jump for Maruti, and it looks like that the stock is getting ready for a breakout on the upside, and especially after today's move, where at the start the stock was almost at 11,500, 600 kind of a mark, to close at 12,000 plus levels, and that too on the back of such strong volumes, indicates that the markets are going in with a bullish or a potential bullish sentiment for Maruti. And in the last 4 to 5 weeks also, the stock has been establishing a good base at this 11,500 mark. So I believe that 11,500 is a good zone for traders who are looking at a contraband Maruti, and looking at the volumes as well as today's candlestick move, expecting the stock to perform pretty well for itself.
Okay, that's the take coming in on Maruti. In fact, here's Jay Kali from Elara Capital talking about the impact of Trump easing on the auto tariffs and what might the implications be in the short as well as the medium term on both the demand as well as supply constraints.
From a medium-term perspective, not only for auto tariffs, but overall because of the other tariffs across sectors, you will see inflationary pressures in the US. And mind you that, a couple of months back, it was only the US that was expected to give a strong growth in terms of the guidance for many of the OEMs, whereas other regions were expected to be weak. Now, even US is expected to falter. There's no going back on slowness or slowdown in demand in the coming months, because you will be still having some bit of cost pressures, supply chain pressures, disruptions in that. And the suppliers effectively will get hit more by demand slowdown than individual company tariffs, because it differs from supplier to supplier, component to component, and OEM to OEM based on their localization efforts. But as an overall, if I have to look at, definitely we are headed for much more pressures in the US market in terms of demand slowdown.
We continue to focus on international business. Okay, and as we had communicated in the past, our share of exports business on our revenues currently hovering around 20%. Our endeavor is to take it to 25% in a 2-year kind of a time frame. In the year that went by, in FY25, international business grew by about 8.5%. Okay, going into the current year, we do see double-digit kind of a growth. Overall, CAT grew in double digits in full year, and also in Q4 we grew by about 14%. We would like to see some momentum in the international business from the current quarter. We had some challenges in the previous financial year with respect to availability of vessels, availability of containers on time. That had some impact on our revenue, but otherwise we grew strongly at 8.5%. We look forward to a double-digit growth in FY26. So we see a mid-single-digit kind of a growth possibility in the coming year. And we hope, in addition to that kind of a volume growth, we hope to get some price growth with premiumization and with some selective price increases. We hope to, see a double-digit kind of a growth going into FY26 and overall at revenue level.
All right, so that was the management of CEAT. The stock has gained almost 9% in trade right now after a strong management commentary. And not just CEAT that is gaining trade, other counters within the auto pack like Apollo Tyres and Balakrishna, they are also holding on to the gains of 3 to 4%. So definitely, CEAT has been setting the trend for the tyre companies for now. But let's move on and let's also get you some of the trading ideas from both of our experts. And let's get you the closing trade ideas. And Kunal, you go first. Tell us which is the stock that you're eyeing right now.
So I'll go a bit defensive and look at pharmas in the sector overall. So Sun Pharma is something which I would be bullish on at current levels. The stock is on the verge of a breakout of a minor swing resistance about the 1440 mark. So expecting the stock to perform pretty well over the near term.
All right, so that's a buy coming in on Sun Pharma. But Shrikant, which is the stock that is making up to your list? Shrikant, your closing trade idea.
Correct. In that space, specifically, I would like to go with Vedanta. If we go through with its technical pattern, then it is forming some rising top, rising bottom sort of series on daily basis. And also, if we consider the overall its selling pressure, then it is absorbing its selling pressure somewhere close to 420 levels. Based on its technical formation, I am of the view that the stock is heading for at least 445. We can keep a stop loss at 414. The other stock which we like is from the auto space on which we were discussing just now, and in that Maruti did really well. In fact, it is on the verge of crossing its previous high. That is the overall view based on its technical formation. But yes, we also like Mahindra and Mahindra, and most of the time, whenever there is like reporting of this auto numbers, we see some activity, specific buying interest in Mahindra and Mahindra. This time also, I'm expecting this stock to move towards the levels of 2990 or 3000. And here, for creating any long positions, we can keep a stop loss around 2895.
Right, okay. Those are some interesting ideas coming in, but still got less than half an hour to go, but still a good time. So let's see where the markets actually settle in before tomorrow's day's break. We'll take a very quick break, come right back for more. Back with closing trades. While it's quiet for the Nifty, let's check in on what the precious metal or the yellow metal is up to. Given that it's Akshay Tritiya today, Sumita Karir, my colleague, joins in from one of the showrooms in Noida, that's Delhi NCR, to get us a mood check on this auspicious day of Akshay Tritiya.
Well, I'm coming to you from this showroom right here in the national capital, and it's Akshay Tritiya Day. But if you see around the showroom, there are not very many people here, just about 2 customers, and I've been here since the past half an hour. The footfall of customers, as much was expected, is not really here, given the fact that gold prices have soared over the past couple of months. However, they seem to have eased off a bit in the past few hours. However, prices still remain elevated. And let's get a sense of customer purchase patterns from Mr. Gaurav, who's of course the owner of this showroom. Thank you very much, Gaurav, for joining us here on ET Now. Give us a sense of, the customer traction that you're getting this year versus last year. Is this something that you were expecting?
Thank you, ET. Thank you for being here and giving me an opportunity to say something about the gold prices and Akshay Tritiya. Happy Akshay Tritiya to all our customers. So the gold has given a 45% gain since last year. And we were expecting these slow footfalls this year because gold has risen, since January it has risen 28%, which is quite a lot. And I'm sure the instability in the market is not very confident for customers to, buy gold. But I'm expecting a lot of better footfalls by the evening, I'm sure.
All right, so you're anticipating some customers to sort of come and drop by this evening. The day is not over yet. However, half the day has gone. Gaurav, but are customers veering towards other options, let's say silver, for example, given the fact that gold prices have remained elevated for a very long period of time now?
Yes, they have been. And gold has given the investors a very good return. And silver is also the new gold now, and people are preferring buying silver more than before.
All right. Well, of course, gold has been one of those asset classes where investors have earned very handsome returns. Almost a 42% jump is what we have seen of late. But back to the markets then. And what we are seeing right now is once again Nifty 50 slipping into that red territory. Nifty Bank almost at the day's lowest point as we speak right now. And India Wix too, that's the index we should be tracking because it's a of 5% what we are seeing in today's trading session, almost closer to that 18 odd mark. But with this, viewers, let's move on and let's also welcome on board Siddharth Kemka, Head of Retail Research at Motilal Oswal. Hi, good afternoon, Siddharth, and great to be speaking with you. And first up, help us with your take on the markets. What are you making right now? Because there's a lot of uncertainty around with respect to the tariff, how this could actually impact the businesses in the times ahead, and we still have the 90-day window left. So what's the outlook coming in on the markets right now?
Yeah, good afternoon, Srishti. Good to be on the show and glad to be interacting with you. So if you look at on the global front, things are gradually improving. We heard the US Treasury Secretary as well as US President Donald Trump saying that India could be, in fact, one of the first few countries with whom US does a trade deal. So very close to getting that negotiation done with, and I think that should be positive initially for the exports oriented sectors, but I think that should also lift an overhang which has been there for quite some time. So I think India could possibly do the deal before the 90-day window. Now, the concern for the market has, in the last few days, especially, has been not from the institutional front, who we are seeing that on a regular basis or on a daily basis, both DIs and FIs have been net buyers. And that's a phenomena we generally do not see the both being buyers on the same day, which has been the case for last few days. The retail and maybe the individual investors that I think are a little bit cautious, especially given the geopolitical issues brewing up on our border itself with Pakistan, and I think that they were bracing up for some increasing in the geopolitical tensions that could lead to some meltdown, and that led to some profit booking in the market. So we are seeing is that Q4 earnings largely in line to better than expectation. This could be the last quarter where we see the earnings bottoming out. And from here on, we believe some of the domestic focused sectors. So, for example, you have the banking, financials, where RBI has been consistently improving liquidity. Interest rates has been cut by 50 basis points, and our expectation is that during the course of the year there could be another 50-75 basis points rate cut. That is one space where we are positive and looks pretty strong. We have got pretty strong results from the index, from the banking heavyweights. Another sector is the consumption, and especially if you see the discretionary as well as this time around, we expect the staples also to start showing good numbers on back of improvement in demand, the healthy monsoon predicted by IMD. So that's the another space that we believe could do well. With the trade deal, whenever that happens, some of the export focused sectors, be it pharma, auto ancillary, IT, that could also start showing some signs of strength going forward.
Right, okay, so that stay with us. It's all about earnings and eternal orders, while Zomato is all set to come out with its numbers. And this time around, it's expected to be a weak set. Why so? Snehi is here to tell us what her poll is penciling in.
Well, yeah, so a weak set of Q4 numbers is what we're expecting from Zomato. On a consolidated sequential basis, revenue is seen growing at 7.8% at 5,824 crores. On the flip side, EBITDA is seen declining 37% just on a sequential basis at just 102 crores compared to 162 crores in the previous quarter. Net profit also expected to be down 29% sequentially at 42 crores compared to 59 crores QOQ. And EBITDA margins are seen declining sharply, coming in at just 1.75% compared to 3% in the previous quarter. Some expectations on the segmental front: food delivery revenue is expected to drop almost 2% sequentially. Adjusted EBITDA as part of GOV we are seeing at 4.3%, contribution margin of 8.6%. For Blinkit, it's expected to post an EBITDA loss of 250 crores, GMV growth of 14% sequentially, and EBITDA margin drop of 1.9%. Hyperpure expected to do well. Factors to watch out for when the numbers come out in terms of a net store addition for Blinkit. What's the outlook on food delivery, margin trajectory, order volume growth, as well as outlook on competition? All in all, weak set of numbers expected for Q4. Keep your eye out on the earnings when they come out.
Thank you so much, Snehi, for getting us all those details. So let's watch out for Eternal. This stock gets very volatile post the earnings and we see sharp reactions coming in. But Siddharth, given this space, we have seen a lot of competition kicking in as well as impacting Zomato as well. But around this 230 odd levels, if somebody has to take a long-term view, given the growth opportunity in the sector, given the valuation Zomato is trading at, what's the outlook coming?
Yeah, I think there has been some pressure on the earnings outlook, especially after the increasing competition in the quick commerce segment, with all three large players, be it Zomato, Blinkit, and Swiggy, raising funds for the strong expansion plans in the quick commerce segment, and that is leading to some pressure in the interim. But if you take a long-term view, I think the food delivery business is something which is now maturing and giving the kind of stability to the overall earnings, the free cash flow that they have started to generate. Quick commerce is still a high growth segment, and we believe that that could be a game changer for a company like Zomato, even for the likes of Swiggy, where we believe that the high growth finally, eventually, when that turns around, would be a cash generating machine. But one needs to definitely take a long term call. What we see is that the overall is well positioned to capitalize on this expanding base of its customers. We see a steady growth in order volumes as well as values, and with improving unit economics, profitability over the long term will come by, and hence this is a very good levels to look at. Zomato currently
Getting snapped, I think. We'll just get back and get in the views from Siddharth. But Shrikant, let me get your BTST ideas.
So again, yes, the market is like in the range. It is not crossing the level of 24,400. It is not breaking the level of 24,300. And whenever like we see such type of range bound sort of activity in the market, we need to focus on those sectors which are performing or doing well since the last, let's say, few days. So in that space specifically, I would like to go with a few PSU banks. There we saw a good amount of strength, and in that PNB looks good, which is currently around 100, 101 sort of levels. It is in the range. It is not crossing the level of 105, but at the same time, it is not breaking the level of 98. So with a stop loss at 98, we should look for creating some long positions on PNB with a target of 108 on the high side.
Right. Kanal, what about your BTST ideas?
So I'll go with buy on SBI Life. Insurance stocks have been looking very strong. In that regards, SBI Life is also another candidate of a potential breakout further. So buy with a target of 1800, stop loss at 1730. And Raymond is the other stock which is showing signs of a volume pickup. So it's suggest a buy with a near-term target of 1575, stop loss at 1480.
All right, so those are the BTST ideas coming in from both of our experts. But Siddharth, since we have you back, you were just completing that point with respect to Zomato. So if you want to take it ahead at 230 odd levels, is it a good buy? And Siddharth, since we are just close to the close of the market, just a few minutes left, if you would also like to share that which are the sectors that are looking attractive to you right now, or best if you can talk stocks.
So just to finish on Zomato, we feel it's a good, strong, long-term buy, and we have a buy rating on Zomato with a target price of 260. In terms of stocks and sectors, as I said, some of the domestic focused sectors like banking, consumption-driven stocks that we like. Within the exports focus, we believe that with the trade deal with US, sectors like pharma will be back in focus. One particular stock we like is Blue Jet Healthcare. We just initiated coverage today. We believe that the company not only is present in niche segments, but is also looking at driving new products, newer segments, and ramping up supplies in some of the newer segments where the margins are much higher. So overall, we expect a strong growth, at 27% revenue growth over the next few years, and that should, with an average EBITDA of 35%, that should lead to a strong earnings growth going forward. And we believe that stock could be a differentiated pharma offerings, and we recommend a buy with a target price of 865.
All right, so let's watch out for that. With just a few minutes left for the market closing, and what we are seeing is that the Nifty is turning a bit volatile indeed. We are actually at the day's lowest point, slipped below that 24,300 mark, as well as when it comes to Nifty Bank, a bit of a profit booking still taking place. More than 300 points of cut is what we are witnessing. Tomorrow is definitely a trading holiday, so maybe just before that we are seeing a bit of an unwinding happening. But the breadth of the market at the closing, towards the closing, is not looking that great because the advance and decline ratio is not holding up well. And internationally, I believe that dollar index is once again surging, now nearing that 99 odd mark, even surpassed that. So we have to wait by and see that when we open on Friday, where that dollar index is. But well, of course, yes, we are just getting weaker tick by tick. But life insurance counters, those stocks are doing very well. They are in for a very strong closing. Bharti Airtel too has been one of the strong contenders. And other than that, it's HDFC Bank that is trying to lend some bit of a support to the markets. But it's HUL that is now one of the top gainers in the Nifty 50. And Kunal, quickly, if I can have your take, because at the start of the day, I was just looking that some of these FMCG counters were buzzing, and when markets turn volatile, defensives come at the forefront. But do you believe it's time to actually look into some counters?
Yeah, I think many of these FMCG stocks, they should be bought at current levels, because there are two things which have happened. One is that these stocks have gone through a pain of 6-7 months. These stocks have corrected by 30-40%. Broadly from their September 2024 highs, which is a very rare kind of an exception, because these stocks, they generally don't tend to fall in a matter of 3-6 months by that kind of a margin. And then the base building has already happened for the last 2 months for these names. HUL has formed a good base at sub 2200 marks, spent almost 1.5 to 2 months at those levels, and then managed to pick up pace further. So I believe that when the market gets into a volatile phase, and especially for a sector which has already been beaten down over the last 6 months or so, I think it's a good time where one should look at buying these spaces.
Okay, that's the take on the FMCG pack. But Siddharth, good to have you on the show. Chandan, good speaking with you as well. And Kunal, we'll let you go on that note. And I'm going to quickly hand it over to Snehi for the closing trades.
Well, absolutely. Lackluster is the kind of trading session we've seen today. In fact, now we're even below the 24,300 mark. That's a level we had managed to sustain for the most part of the trading session. But now 0.2% cut seen on the Nifty. Similar can be said for the sensex as well. 0.2% cut coming over there as well. Advanced decline ratio very steeply in favor of the declines today. You have the India Wix that was also spiking up almost 6% at one point. There it is, 6% uptick on India Wix. Nifty Bank is also up, is down 0.7%, so pressure seen on the banking index as well. If you take a look at some gainers and losers today, HDFC Life, Maruti Suzuki, Bharti Airtel, SBI Life, Sun Pharma. Select names that have done very well for the Nifty, gains anywhere between 1 and 4%. On the flip side, Bajaj Twins, continue to put some pressure on the index today. Bajaj Finserv as well as Bajaj Finance, a cut of north of 5% coming in on both of these names. Trent continuing to languish on the back of soft like-for-like growth, a 4% cut on that front. Tata Motors down 3%, SBI down 3% as well. Let's take a look at the broader markets. Nifty mid-cap and small-cap, both of them bleeding away in the trading session. Deeper sell-off intensified on that front. A 1% cut coming in on the mid-cap index and almost a 2% fall coming in on the 2% fall is now what we have seen on the small cap index as well. Let's take a look at some sectoral gainers and losers today. Realty and Pharma, the only two sectors in the green, buoyed by names like Godrej Property, Lodha, Soba, DLF for the real estate space. Sun Pharma did pretty well for Pharma. On the flip side, you have media, PSU banks, energy, bank, metal, IT, FMCG and auto in that pecking order from most to least losers. Very quickly, let's talk about some quick earnings candidates. Greaves Cotton, exceptionally good set of numbers coming in. That stock was up 7 or 8% today. Seat also good set of numbers coming in. Guidance also looking very healthy, where estimates have been maintained going ahead. Jefferies has maintained a buy rating on CG Consumer. That stock did well. Uno Minda, board of the JV of the company, have approved detailed project report for the development of high voltage project. So that is a positive news flow. Zydus has also received a positive nod for their cholesterol drug. Lots of stocks in focus today, but at the end of the day, it's the bears that have had the session go their way today. A 0.3% cut is what we've seen. Sub the 24,250 levels will give those some time to settle, but that's what our earnings session has summed up to be like. Market holiday tomorrow, and we'll see you on Friday.